Hi, guys. I wanted to come on and talk to you because we're at kind of an important moment in the VIX term structure. As we come into next week, we've got just a couple days till expiration. And, a lot of people have brought up the fact like, wow, well, we've been in this great contango setup, but that appears like it's just about to end. I mean, if we look at our term structure here, we can see that, yeah, we're in contango, nice healthy 19%, but that ends as soon as we get out of September. All of a sudden, every other month is slanting straight down. What's up, Warren the Idiot Masses? And a lot of people have said, well, what are we going to do then? This is a big problem, et cetera, et cetera. We went from a situation where, like, the S&P goes up, VIX goes up. S&P goes down, VIX goes down. We went from that situation till the opposite situation last week where even with the market selling off, volatility continues to come in. And this people have reacted to this in different ways, but for me and my position of being short VXX, it's been a great thing. It's like you can do no wrong. Volatility just is coming in no matter what. Plus, we've got the extra kicker. Excuse me. I keep drinking this Diet Coke. It makes me a little gassy. We get this extra kicker that we've been in this contango that just continues to stay high for a long period of time. Now, I want to talk about what's going to happen this week on expiration. Remember, VIX expiration is in the middle of the week, right? So it's going to be on the 15th, which is in 2 days. Hey, what's up, Dasboff? Nice. You're a member. Awesome. Good job. So we have to see what's going to happen here, and I want to make the case for you. We'll see if I'm right or not, but I'm speculating that what's going to happen is that once September rolls off, the other 2 months are going to arrange themselves in contango. So let's discuss. To do this, you kind of have to put yourself in the feet of the market makers in VIX futures. So all right, so the whole month, we've got these big products. A large percent of the volume in futures for the VIX comes from these ETPs, which are, the biggest ones, VXX and UVXY, of course. And there's also SVXY. And SVXY and UVXY offset themselves to some extent, right? If you had equal amounts dollar-wise of people that owned SVXY compared with UVXY, then you wouldn't have to go out in the market and hedge them at all with futures because they just offset each other. But as it turns out, there are way more people that own UVXY than own SVXY. And because of the difference in leveraging between them as well, the end result is that ProShares needs to go and perform the role every day to make their products work correctly. And VXX, the same thing. They have to perform the role every day. Now, you might say, well, Dave, these products, they don't necessarily perform the role. They might internalize it, or they might purchase swaps. We know, for example, if we pull up the ProShares website right now and look at UVXY, daily holdings, okay, when we look here, we see, all right, well, we've got some October futures, mostly October futures, right, because we're right near expiration. Here's some SEP futures, and then we've got this component here, which is actually very small right now, right? It's only a mere $39 million. Sounds like a lot of money to me, but compared with this, $1 billion of futures, OCC futures, it's not that much, right? And then this $1 billion of cash, it's not that much. But at times, this is a bigger component, right? So they might use swaps, but they're buying and selling these futures every day. They have to perform the role. So when we go back to the VIX term structure here, all right, these futures here get bought and sold every day. And now people might say once again, all right, Dave, market makers in these products are making a market around a particular index. For VXX, it's SP Vixter. But all that being said, yes, market makers are making a market around the index, but the actual mechanics of the pro shares involves these futures, and these futures are getting bought and sold every day to perform the role. Now, even if they're using a swap, well, the company that sells them the swap has to somehow hedge themselves as well. So indirectly, this role is getting completed. Either directly or indirectly, the role is getting completed every day. So what does that mean? That means that in a very basic sense, every day a bunch of ACH futures are being bought throughout this month throughout this expiration cycle that we're about to end. Every day, some of these ACH futures are being bought and the SEP futures are being sold. So if you've got a net buyer of, we can call this the calendar spread, right? The spread. They're buying ACH and selling SEP. So if I have to keep selling ACH over and over again, what am I going to do? I'm going to slowly raise the price. If I have to keep buying SEP, I'm going to lower the price over time, right? If I'm going to have to keep doing this spread, I want to do it for better and better prices. So at the end of the month, futures traders are going to be short this October future that's way up here and long this SEP one. Now, the SEP one's going to roll off. So in the end, people are going to be short a whole bunch of these futures. However, they know that very soon, instead of having to sell the October futures, they're going to have to start buying these futures. So as soon as the expiration occurs, this October future, which a lot of these guys are short a bunch of, they're all of a sudden going to have to turn around and start buying them. So as soon as October becomes the front month, guess what starts to happen typically? Well, if people are selling you these October futures and buying the November futures, well, that relationship is going to start to switch, right? As more and more Nova futures are bought, it's going to move up, and as more ACH futures are sold, it's going to move down. So you can watch it with me and we'll see what happens. And there's been some dispute over this whole scenario here from some of my viewers saying, well, no, Dave, October futures represent, when we're talking about a future, this represents the VIX 30 days from out. So essentially 30 days from October expiration. And thus, this October future is the one that's most involved with the election, and thus that's going to stay higher than the November one. Right, UVXY and SVXY are inverses. So my point was that if you had equal dollar amounts of UVXY and SVXY, then you wouldn't have to hedge them at all because they kind of offset one another. So SVXY is it's slowly going to move up over time due to contango, whereas UVXY is going to go down. So, Dasboff, I'm trying to make the case here that I believe that we will not, if we're in backwardation, it will only be for a very short time, because all that will matter after Wednesday is October and November, and just because of the fact that the role needs to be performed every day. Every day, as soon as expiration occurs, there are going to be net sellers. The public or the funds are going to be net sellers of the October futures, right? So the market makers are going to be buying net buyers of these October futures, and they're going to be net sellers of the NOV. So very quickly, they're going to want to take this October price down and move the November price up. So my speculation is that these two, October and November, are going to arrange themselves back into contango very quickly. Now, I don't know if it will happen before expiration, in the week after expiration, or if we will just stay in backwardation. But I'm speculating that these two futures will arrange themselves into contango quite quickly. Right now, they are in backwardation by 4.37%. But just due to the fact that this roll has to occur every day and there's a lot of contracts that are getting rolled, I expect to see these go into a contango state very quickly again. And if we could get these, into some sort of contango level like we've had recently, like above 10%, that would be awesome because it just continues to decay these products. And you'll see the volume right now is in the front 2 months. It will continue to be in the front 2 months. So as November comes online as being a key component in these products, the volume will increase in these products as well. We can see, for example, here, I'm pulling up volume figures this is for Friday, actually, and you can see most of the trade is in the front 2 months. We've got 66,000 contracts traded in the front month, 56,000 in the second month, then it drops off to 15,000 contracts, 9,000, 6,000 on the way back down. So I can't predict what's going to happen to UVXY. Like, where people always want to know where's UVXY and VXX going to move this week. I can't predict that. It really depends on what the market does, levels of volatility and whatnot. But what I can talk about is if we can get back into a nice contango level, that's going to bode well for these products decaying long term again. And it's going to be very interesting to see what happens to this relationship in the next couple days because, this great contango that we've had to decay these products over the last month is quick to disappear here, right? If it was Wednesday right now, we would be right in backwardation. But I would speculate to you that this curve is going to adjust itself so that the way September, October looks right now will be the way October, November looks in a week or two. But we'll have to wait and see what happens coming into this week. Do we get a continued move down in the market that we've had? And there's been a lot of speculation about this. What happens to the S&P moving forward? Let's pull up the S&P from last week, and we saw a lot of attempted rallies kind of fail last week, right? We would see it kind of start to rally in the morning and then it just fail. But even though it failed, volatility has come in a lot. And I would speculate the reason why volatility has come in a lot in the last week or so is because it's kind of like the market is getting back to some sort of reasonable level, right? Before it was like rallying every day, and that really didn't make sense. And it was way overextended to the upside, and now it's back to some sort of more understandable level, right? We shouldn't be at all-time highs right now because the economy is just really not doing that well, for one thing. And a second thing is I would say it's too early for really warn the idiot masses. I would say it's really too early for tax loss selling for most people. I mean, we're still kind of like at the end of the summer, and I think we're still in the third quarter. Even it's still kind of early for tax loss selling to be a major factor on this market, I would say. But we've really seen the market come off the highs here. And the other thing that's, I believe, really important that more and more people are starting to talk about is we have not gotten a stimulus deal, right? And there's news stories coming out saying that like 50% of the unemployed public cannot even afford food, that all these people are going to lose their houses soon. And there were so many articles saying, well, the market just really isn't reflecting that. Well, all of a sudden, we've had some of these stratospheric stocks start to come back to earth. So let's take a look at, I can give you the normal examples, Tesla and whatnot. You've seen Tesla come off, a little bit come off of the extreme highs it was on. Lululemon, one that that I've been following for a while. Look how much it's come off this big ramp. It's funny, watching trading videos is so watching like guys that are selling these trading courses is so kind of depressing in a way. These guys basically pulling up a chart before the open and then taking a shot on getting long or short something just based on what they see in the chart. And I would caution you that that is much more of a crapshoot than these guys make it out to be. I mean, they use all these fancy technical terms, but you're really rolling the dice when you're doing that stuff. And they try to make it seem like such a system, but for me, it's really rolling the dice. Now, people have had certainly more luck with talking about averages, 20-day moving average, 50-day moving average, 200-day moving average. And the reason I believe sometimes that stuff works, if we're way above the 200-day moving average and when we come down to it and bounce off it, a lot of the reason that stuff works is that so many people have bought into that theory that everybody kind of acts in concert at that point, and people choose to buy at that point. And the only reason it's really working is the psychology of everybody else is following that same number, and then it rallies. I would not be surprised, and the fact that vol has come in as we've moved lower is kind of evidence for me that we might stay grinding lower and we might stay in this area for a while. It's almost like, well, we extended way to the upside and vol kind of expanded and exploded because it just didn't seem to make sense, and people were getting excited and, buying this stuff way up, and then finally we had that sell-off and it came in a little bit, and now kind of the excitement's over. There's been pretty heavy volume, but I would speculate that moving forward, there's going to be less interest in the stock market, and really the reality is going to set in. Certainly, we have the excitement of the market coming up in the next 3 months, but of the election coming up in the next 3 months. But once the election's over, reality is really going to set in for this economy, regardless of who gets elected. Now, the Democrats are favored right now to win the election, and I think that, unless the president can really pull something out pretty quick, he's running out of time here to do something. Now, certainly for me as just an American who's has the same worries as everybody else about their job and everything, the fact that the president actually did do that that unemployment thing that got people that $300 extra bucks a week, even though it might not last for that long, that was something in his favor for me. And the fact that the Democrats have they haven't they could have done the deal last week, right? The Republicans in the Senate were putting forward a deal. Mitch McConnell and company were putting forward a deal. It would get everybody who's on unemployment $300 extra bucks a week moving forward for now. And I was watching Brooks and Shields program on PBS, and David Brooks, who represents the Republican side of things, had an excellent point, which is if the Democrats really realized how much people are suffering, they would have said, all right, let's take this deal and get the people at least the $300. It's not the $600 we wanted, but let's get the people something to keep them going here. I think it's going to become more and more of a crisis. Now, the market shook off everything for a long time, and the politicians were able to point to the fact like, well, the economy is supposedly not doing that well and people are supposedly suffering, but look how the market's making all-time highs. Well, all of a sudden, that particular little point is disappearing because the market's off all-time highs now, and the economy is not only not doing well on the ground, but it's starting to falter in the markets as well. And so that, to me, the sum total of all that I've just been babbling is that we could see the market grind lower or move sideways. I remember I was trading back in 2000, 2001, and the market just ground sideways. I know it's hard. It's very hard as a trader to shift gears when you've been in a market that's been like rallying straight like this one has. It's very hard to shift gears and find a market that's not rallying every day or that's not able to rally, because you get used to that scenario. Like, oh, well, if we have a down day, people are going to come in and buy it, of course. but the markets do shift gears from time to time, and I would not be surprised if we move sideways, vol comes in, and nothing happens for a while. I don't know what's going to happen any more than anybody else does, so be suspicious of people who say, this is what's going to happen, I know what's going to happen, because nobody can know what's going to happen. And if people don't recognize that nobody can know what's going to happen, they're missing a key point to trading, and I would be very cautious of what they're saying. So expiration is Wednesday morning for VIX products. It will be interesting to see what happens here. Moving forward on that, we do have the futures reopening at 6 o'clock today. We'll see what happens with that, but I would not be surprised if we don't continue to move sideways for a while. What to do in a sideways market? Sell puts and calls. Well, certainly warn the idiot masses. Selling puts and calls has been something that's worked recently as volatilities come in. That has worked. For me, back in 2000, I was long like far out options. By far out, I mean weren't expiring for a long time, and that did not work at all. If you've got a slowly grinding market, yes, volatility is going to continue to come in, and yeah, you could sell sort of out of the money, way out of the money puts or way out of the money calls, and see how that works. It will be interesting to see what happens to the whole Robinhood crowd. They've talked so much about like how the Robinhood crowd of younger traders has been in control of the situation and has been buying all this stuff out. But it'll be interesting to see how they react, these people, a lot of them, to kind of like their first time at a down market. And like I said, we don't know what's going to happen moving forward, but it certainly does feel like a tone shift has happened in the last week, and it certainly looks that way from the charts too. So it's an exciting time. For me personally, I'm going to keep my short in VXX on, partially because I still haven't made back the money I lost initially. If you look at my P&L here on the bottom of the chart here, you can see it says negative 228. That got up to like negative $2,000 at one point. I'm almost back to even. And I knew that in my head that even was around $25 in VXX. Right now we're at $25.52. And I'd be interested to see, I've got till March for this position to work out, but I would be interested to see if we can take out the all-time low is down around 13, but if we can take out the recent low and get below 20, that would be neat. But I don't think it's out of the question for us to take out this, when the question on a lot of people's minds is, when do we take out the all-time low again in VXX, right? And I don't think it's out of which is 13 and change. And yeah, it could be hard for volatility to get down to like the teens again, but it's not impossible. It's got to go down to the teens sometime, right? And we've had a really bad year for VXX and UVXY. So that has to turn around at some point, I would say. I'm just trying to fix this here. Remove all studies. All right. So look, that's the all-time low is 13. We're at around 25 right now. We got to hit that at some point. Why not that be sometime soon? Let's take a look quickly at our TVIX for those of you who still have TVIX positions on. We're down to 66. We got down to a low of, 50s, like 55 last week, something like that. We're closer to taking out the all-time low in TVIX than in the other products. Of course, TVIX being a 2 times leveraged product. TVIX no longer exists, but TVIX-F does exist on the over-the-counter market, and we can see this is the little spike we had last week in TVIX. It pretty much doubled. Now it got as low as 58.09, and we'll see when we can take that one out. Well, I mean, for us to get to $10, Well, we'd have to have a big crush after the election. Now, people are expecting a crush in volatility after the election, right? So what if we were just go, and I'm not trying to be political here, but let's just, let's make an assumption for the moment that the Democrats who are winning right now come into power and win the election. There'll be a crush either way, I believe, but the economy has problems right now, right? And so I don't see us just like all of a sudden going back to all-time highs. For us to get to 10 by December, we would need to go back to all-time highs in the market. And I just don't see that happening right now. There's too much problems with the economy that neither party can sort of solve, in my mind, right now. Now, the sort of conventional wisdom is, oh, okay, the Republicans are better for business and the economy. And right now in the polls, the president is favored by the public at being better for the economy, et cetera, et cetera. But I don't think either party coming into power is really going to be able to solve the problems this economy has right now. Remember, we've got potentially another difficult period coming up to do with healthcare, right? Because we've got flu season coming on. I believe that there'll be a crush after the election in volatility, regardless of which party wins. I believe that the term structure, we always say the term structure is not predictive, but the term structure is sloping in a way that the futures are lower after the election, and that talks to a crush after the election. So either way, there's going to be a crush after the election. The question is, how much of a crush do we get? Will that take us down towards that 13 number or not before the end of the year? It would be great if it happened, but I wouldn't really hold your breath. But if we can stay in a consistent contango of over 10%, we will break that 13 level sometime in the next year. Once again, my position in VXX is in March options, so I would love for that to happen before March. That's still like almost 6 months out, right? So in the next 6 months, I think we can get to 13 in VXX, but it's something that we have to have patience for. We could easily flash crash. Well, I mean, Kenyon Scale says we could easily flash crash on the election. I'd just be careful of your terms there, because the flash crash was a crash that was caused by technology, right? That only lasted for a day or two. I think when you say flash crash, you mean that we could have a volatility event where the market went down a lot before the election, at the election, in the middle of the election, this sort of thing. And that's certainly possible. I would very much caution anybody to try to play any big trades on the election, because it's a very difficult thing to do, and you've got people with different opinions, and most likely not that much happens on the election. Although, each party would like to say, well, the other party is going to be terrible for the stock market. And I'm certain that if you interviewed like my dad, he would say, well, if the Democrats come into power, it's going to be awful for the market. They're going to regulate everything, and the market's definitely going to go lower. And if you interviewed Democrats, they would say, well, historically, the Democrats actually do better for the market. So, there's obviously a conflicting opinion here that we're not going to resolve in this show. But I would just caution people trying to make a bet based on who you think is going to win the election and which way the market's going to go is very difficult. It's very hard to tell. But either way, I think it's safe to say that we will have at least some sort of volatility crush with the election. And it's going to be exciting this week to see, once again, going back to our VIX Central, how these futures line up and if they indeed arrange themselves into a contango state. Now, remember, the contango that we've been in over the last few weeks is an extreme, right? If we look at our contango historically on our VIX Central, and this is the chart Edward loves, we can see that, we're higher up. This blue line represents the contango. We're higher up than any time in this chart right now. And you can see it never stays up here very long, right? It bounces back down quite quickly. And indeed, if stuff stays like it is, if the chart stays the way it is right now, this line will be down below the red by Wednesday, right? Because we are in a situation where we will be in backwardation by Wednesday if this chart doesn't start to adjust itself very quickly. My contention is that this chart will start to adjust itself. It might take a few sessions, but that we will arrange ourselves at least into some form of contango by the end of the week, right? By Wednesday, if nothing happens, we'll be in backwardation, and this blue line will be below the red by the end of the week. I believe that the roll will force us into contango between October and November soon, but it will be very exciting to watch as we come into expiration on Wednesday, how this curve continues to play out. October is always a sketchy month. Yeah, October. People remember that October was when the big crash was, right, in '87. So people are always fearful in October. Also, you have traders who are on vacation for most of August, coming back into September, October, and all of a sudden people are out there doing their thing. So, fireworks could occur. Of course we could just rally right back to the highs again, but I personally don't see that happening. Nobody knows what's going to happen moving forward, but I would not be surprised if we don't grind either sideways or down for a while. Remember, if we look historically at the market, it has had several periods of grinding sideways, and people say, "Oh, well, this is a different market. This is the new era of passive investments." And when I think about the stock market, I do think about that. I think that, okay, well, a lot of the investment in the market is people are getting a certain percentage of their paycheck every week that's being taken out and automatically put in the market. So you've got this slow trickle of money in the market no matter what. And for us to go down, you have to first offset that slow trickle of money into the market before you can go down. So it takes a little doing for the market to move lower or to grind lower and essentially to not move higher, because over time you've got more and more money being created by governments bailing people out and just by more people on the planet. And so the market's normal course of action is to move higher. So it takes a little doing for us to move either sideways or lower, but it still seems to me certainly possible that we continue to have this down move for the time being moving forward. The trend, if you watch a lot of other stock market people, I don't know, check out Shadow Trader. He's an interesting guy. You can see that we've sort of broken the trend, right? Especially with the NASDAQ. The NASDAQ has been weaker than other markets. We've sort of broken the up move in the trend and the trend to the upside. And I think that can continue for a little time to come. But what do I know? Yes, well, there's going to be retirees moving money out of the market. And, in a sense, there always are people moving money out of the market, but the baby boomers are a big segment of the population. And, the baby boomers are getting pretty old right now. That's like my parents' generation. They're getting up there. I don't know the exact borders of the baby boomers, but I would say that they're at least like 70 now, right? Moving up towards like 90. And it's a big segment of the population that is heavily invested in the market. And yeah, they're going to be taking money out, but some of them won't be taking money out. Some of them will just be willing it to their kids, their grandkids, and it will just kind of stay where it is. It'll just get transferred on. Most of the money that's in the stock market is just going to sit there forever. What we're fighting over is that little bit on top that is moving around. But as much as people say, well, it's a new market and everything's changed, things haven't changed also. And so we can look to the past for clues as to what's going to happen. And, this rally has been just a huge rally, and just a couple days of sell-off may not be the end of the sell-off here. it feels to me like an equilibrium for the market would be a little bit lower than we are now. But what do I know? Oh, thank you. Baby boomers, 1945 to 64, right? So that's like more like 80 years old, right? Right now. So there you have it. All right, so I've wasted enough of your time. I have to be somewhere for the open of the futures tonight. That's why I came on a little bit earlier, but pay attention to that term structure as we come into expiration on Wednesday. That's going to be really interesting. I hope to I will come on before then, but I just wanted you to point that out to you kind of now when we're not in the middle of like, it's not the open and all the stuff's going on, so you can reflect a little bit on the term structure moving forward, because this is, we've been talking about this high point in the term structure for months, right? It was like 6 months ago we already saw, oh, okay, there's a big bump in the term structure towards the election, and it's actually in this month of October, and I really think it should be in November, because this, even though the VIX represents 30 days out, these October futures expire before we know what happens during the election. So I think that the term structure is going to adjust itself so that November is the higher month than October at some point here. Oldest boomers are 75 years old. So I was kind of looking at it backwards then. I was thinking, I guess in my mind, as Buff, I was thinking like 1925 to 1940. That 1945 was the high end of it, when in fact 1964 is the high end of it. So yeah. So yeah, all those baby boomers are 75. So I guess my folks are on the high end of the baby boomers. So we still have that to look forward to, all the baby boomers retiring, taking all their money out. So that's so we have that to look forward to for a lot of them. Chuckle Hut, well, you have to remember with UVXY that when you look at that chart of UVXY, you're seeing something that's gotten reverse split over and over again. So what's happened is that really UVXY has gone from 60 down to 8, and then it's reverse split. So it's not like it came from 20,000 or whatever. It just keeps reverse splitting. Once it gets down close to 0, they reverse split it. And it doesn't mean that we could somehow, it would be mathematically impossible for us to get back to where it was. We would have to stay in with the futures in backwardation. The reason that UVXY has gone down so much is because of futures being in a contango state. And futures can remain in a contango state for a long period of time, but futures can't remain in the reverse state, which would be backwardation for a long period of time. In fact, if futures stayed in backwardation for long enough, the market, because the reason for that is the market can't go below 0. So whereas the market can continue to go higher infinitely, it can't go lower infinitely. And once you're in backwardation for a relatively short period of time, the market would have to go to 0 or below for it to stay in backwardation, and that just can't happen. So we can never really get back. Remember, UVXY is based on 2 futures that the average is always rolling over time. So the futures that contributed to UVXY when it was at that really high level, those futures are long ago expired. So we can never get back to where UVXY was once before, and there's no really way there's no real series of events that could get us even anywhere close to where it came from. A bunch will be giving inheritance massive. Yeah, I mean, Dasboff says a bunch will be giving inheritance one of the most massive transfers of intergenerational wealth in history. Yeah, that's true. I mean, you tend to think of it as, well, there's constantly people dying and constantly inheritance being passed on, but this is a particular group of people that, all at the same time happening. And what it was, the baby boomers, really what it was like, after the war was over, people being born, right? It's like guys came home from the war and they finally saw their wives again. They're like, hey, baby, what's going on? And then all of a sudden these kids are born, right? That's where it's coming from. And it will be very interesting to see how that group affects things moving forward. Yeah, well, they do adjust, and even Chuckle Hut with an Apple split, the charts adjust for splits also with Apple. In fact, if you priced Apple, if Apple had never split, it would be trading $28,000 right now per share. So, and there are some stocks that they just never split, like Priceline or Berkshire Hathaway is trading, several $100,000 right now, Warren Buffett stock, because they just never split. So yeah, it would be certainly interesting to discuss more of the effects of the baby boomers on various aspects of the economy, not just the stock market. And it's something that I'm sure will be focused on more and more moving forward as that group becomes highlighted, as they quote unquote will start to die off at some point. Moving forward. All right, folks, thanks for watching, and I will catch you before the middle of the week when we do have expiration. Remember, VIX expiration is Wednesday morning. VIX expirations are typically Wednesday mornings. Every once in a while, because of a holiday or something, they'll switch it by a day, but there are no days this year where it's switched by a day, so it's always on a Wednesday morning. And we have also the futures reopening to look forward to coming up in about a little over 3.5 hours tonight. So thank you for watching, and please support the channel. A great way to support the channel is just leave a comment down below. Also, you can sign up for a membership if you want to support independent trading media. We can learn more about the economy, economics, macroeconomics, and whatnot together. Thanks for watching, and we will see you next time on the Short Vol Show live as I queue up my Morse theme song once again here. Thanks for watching. See you next time. Bye.